Hello, everyone, and welcome back to my channel. I will be doing the CSEc Principles of Accounts January 2021 Paper 2. In this video, part 1, I will be doing question 1 to 3, and then part 2 will be following, where I'll be doing question 4 and 5. So make sure, if you haven't done so as yet, to hit that subscribe button and turn on your notification bell so that you know when part 2 is out, so that you can get the completed CSEc past paper 2. But if you could also give this video a thumbs up by pressing the like button. So let's get into this paper. So let's get into question 1. Here we go. So question 1 says you are required to answer all questions on this paper. Write your answer in the spaces provided in this booklet. So question 1 says, John Oyston is the owner of Oyston's Barber Salon. On 31st of December 2020, he provided the following trial balance. So we have our details here: capital 10,100, accounts payable 6,000, and we know that's credit. Debit, cash at bank 8,000, drawings 2,400, rent expenses $4,000, electricity expenses 1,200, general expenses 1,200, supplies expense $1,000, receipts from customers 31,700, that's a credit balance, wages expenses 3,000 debit, furniture at cost $10,000 debit, provision for depreciation furniture 1,000 credit, equipment at cost 20,000 debit, and provision for depreciation equipment 2,000. So here we get some additional information. It says rent prepaid $800, general expenses unpaid $500. Depreciation is to be accounted for as follows: equipment 20% per year using the reducing balance method. Furniture 5% per year using the straight line method. So what are we required to do? So let's see the instruction. So here we go. The A part, the first part says, using the form provided below, which we will be using it to complete our answer here in red, prepare the income statement of Einstein's Barber Salon for the year. So here is what your income statement of Einstein's Barber Salon should look like. First, you ensure that you head up Einstein's Barber Salon income statement for the year ended 31st of December 2020. So as we got our information, we took it from our trial balance. So our revenue is 31,700. We know that's credited. Then we less our expenses, rent, which is 4,000. And remember, they have given us information here, which they say rent prepaid 800. So therefore, we deduct that 800 from 4,000. We got 3,200. That's a debit balance. Electricity was 1,200. Then we had general expense, we had 1,200, so I left off expenses. So 1,200 and general expenses unpaid, which is 500. So we add that together and we get $1,700 for general expense. So general expenses, right? General expenses, that's it, right? 1,700 there. Then we have supplies 1,000, and then wages 3,000. Then they told us 5% off for furniture depreciation, and the original cost was $10,000. So 5% of that is 500. That's a debit balance again. Then we have depreciation or equipment. As it says, it was 20% of the original cost, which is 18,000, and 20% of that is 3,600. So our total expenses is 14,200. And when we deduct 14,200 from our revenue of 31,700, we're left with a net income 17,500. So this, and you will get 9 marks for that. So this is what your income statement should look like. So there you have it. Next, let's move on to the other part of our question. Let's go on to the second part of 1A. It says, using the information on pages 4 and 5, prepare an extract of the statement of financial position for Einstein's Barber Salon to show the value of non-current assets as at 31st of December 2020. So here's what our statement of financial position extract should look like. So we ensure we do a proper heading, Einstein's Barber Salon, Statement of Financial Position Extract, as at 31st of December 2020. So we're focusing on non-current assets. So we know we have our cost, accumulated depreciation, and our net book value. So our cost for the furniture was $10,000. If you will go back to the original question, you'll remember that. Now the accumulated depreciation was $1,500. Remember what we did? Because we are using the information from, we're using our information from what they gave us. So we are just taking our information from what they gave us. So here we go. So our accumulated depreciation is 1,500, and our net book value, when we deduct that from that, we get 8,500. Then for furniture, it is $20,000, and our accumulated depreciation is 5,600. And when we deduct that from the original cost, it's 14,400. So in total, the total cost is 30,000. Total accumulated depreciation is 7,100, and the total net book value is 22,900, and that's for 3 marks. Let's go to our next question. So here we have the third part of question 1A, still on question 1. Below are descriptions of accounting adjustments in Einstein's Barber Salon. In the space provided, enter the letter code which represents the type of adjustment. The adjustments are letter coded as follows: A, revenue expenditure; B, net book value; C for depreciation; D represent bad debts; E, accrued expense; F, prepaid expense. So as example has been done, an example has been done for you. So here we have adjustments and letter code. So the first one, they did it. An account receivable is unable to pay the amount due. We know that is bad debts. We are to complete the other 4. The other one says outstanding invoices to be paid. So that is E, accrued expense. That's the letter code we use. The next one says non-current assets, loss in value. We know that is C, depreciation. The other one says expenditure incurred every day as daily operating expenses. We know that is A. That's the letter code we use, which represents revenue expenditure. And the final one says cost less depreciation to date. So that is B, net book value. So each of those represent, you'll get 1 mark. So in total, 4 marks for this. So that's the end of question 1. Let's go on to question number 2. Here we go. Sorry, I said 2, 1b. It says Zaida received a check for the sum of $8,000 for a debt of $12,000 from from one of her customers, Yoshida, on the 31st of December 2018. 1 year later, Yoshida stopped all payments to Zahida. 2 years later, Zahida discovered that Yoshida is unable to clear the debt and that she must write off the debt. 1. Prepare the entry to record the bad debt written off in Zahida's book. No narrative is required. So in our journal, this is how you would represent it. We have our date, the 31st of December 2018. Then our details would be bad debt expense, and then that would debit $4,000. That would be debited $4,000, right? Because we notice it says has received a check for 8,000 for a debt of 12,000. So there's a difference, $4,000. And then accounts receivable, Yoshida, would be credited $4,000. So that is how you would represent that in the general journal for 2 marks. And it says no narrative is required. Identify, the second part says, identify 2 causes of depreciation. 1, obsolescence. 2, wear and tear. 3, depletion. 4, erosion, rust, rot, and decay. And 5, the passage of time. So you're only required to select 2. So I've listed 5. So any 2 that you select, you would be rewarded for your answer if you were given this question in the exam. So the entire question 1 is total of 20 marks. So let's move on to number 2. So here we go. AK Electronics buys and sells its products on credit only. During the month of December 2020, the following information was extracted from the business accounting records. So here we have it. Okay, let's zoom this up a little bit for you. So here we have it. Opening balances, accounts receivable, accounts payable. So accounts receivable is 8,500 debit, 8,800 credit, accounts payable. Closing balances, accounts receivable, 5,300. There's a question sign for accounts payable. So payments to creditors, 56,000. Receipts from debtors, 10,100. Credit sales, 8,000. Discount received, 1,400. Credit purchases, 68,000. Return outwards, $1,500. Bad debts written off, $500. Sales returns, $200. Total discounts allowed, $400. So it says, the A part, the first part says, state 3 purposes of control accounts in the accounting process. Now, 1, the purpose of control accounts, it help to help prevent and or detect errors in the books. 2, to assist with the speedy preparation of the trial balance, that is providing urgent information relating to debtors, creditors, and so on. 3, to assist with the preparation of final accounts from incomplete records. And 4, to help prevent fraud by the bookkeepers. 5, to help prove that the entries in the individual accounts and their final balances are correct. So I've given you 5 of the 3 purposes. So you would only need to write 3, each mark. 1 represents, you get 1 mark for each, so 3 marks for that question. Let's go on to the other part of the question now. So here we have it. So let's see what they say that we are required to do here. So the second part says, using the information on page 9, which we just came from, prepare the accounts payable control account from AK Electronics for the month ended 31st of December 2020. So here you have it here. So this is what it should look like here. So let's scroll that, zoom that up so you can see it much better. So this is the form that they gave us, your date, details, debit, and credit. So our year is 2020, and based on our given information, you can always go back and look at the question to see the details that we took from it. So on the 31st of December, payments to creditors, that was 56,000 debit. Then discount received was 1,400 debit, and then returns outwards was 1,500. Now on the 1st of December, no, what we were given, the 31st of December, we got purchases $68,000. Now when we add our balance that we brought down, which they gave us on the first 8,800, we have a total of 76,800. Now the balance, the difference between the debit and the credit side is actually $17,900. So when the total debit side subtract from the credit side, our balance carried down would be 17,900. So that would be brought down to the first. So our balance brought down would be $17,900. So this is what your accounts payable control account should look like. Let's move on to the next part of the question now. And you'll get, let's see how much, 6 marks for that. Let's move to the other part of the question now. Here we go. It says, using the information on page 9, let's zoom this up a little bit. Using the information on page 9, prepare the accounts receivable a control account for AK Electronics for the month ended 31st of December 2020. So this is what your accounts receivable control account should look like. You have your year 2020, and on the 31st of December, they gave us credit sales 8,000, and our balance brought down that we got was 8,500 on the 1st of December. Then on the 31st, our credit side details, receipt from debtors 10,100, then bad debts written off 500, sales returns 200, discounts allowed 400, balance. So the difference, the total, when we deduct the debit side, the credit side from the debit side, because we got a total of 16,500. So the difference was 5,300, and that is what we would balance brought down to the first of the month, 5,300. So that's 8 marks. B says, state 3 reasons why the company's bank statement balance did not agree with the business cash book balance. So there are numerous reasons. 1, unpresented checks. Now, we know when we refer to unpresented checks, we know checks paid out but not yet deposited or cashed. 2, unrecorded deposits. 3, and we know unrecorded deposits are checks and cash received but deposited after the bank statement date. Then another reason is return or dishonor checks. And another reason, standing orders or direct debits. Another reason why the company's bank statement balance did not agree with the business cash book could be bank fees, direct credits, or errors, entries in cash book or bank records that are incorrect. So you just need to select 3 from that and you will get your 3 marks for that. So let's go on to our next question now. So here we go. So we're heading to our third question. So it says, match the statements below with the correct terms by entering the appropriate letter code in the spaces provided. The terms are letter coded as follows: A, business entity; B, accrual; C, prudence; D, duality; E, consistency. So here is our statements and our letter code. So here we have it. So the first one says expenses and revenue are recorded when incurred or earned respectively. So we know the letter code would be B, that's an accrual. The next one says a company's financial statements should follow the same accounting principles, methods, practices, and procedures from one accounting period to the next. We know that it's E, consistency. The next one says the personal transactions of the owner are kept separate from the business transactions. That is a business entity. The next one, assets should not be overstated and liabilities should not be understated. So we know that is C, prudence. And the final one says every transaction if affects at least 2 accounts. We know that is D, duality. So each of those represent 1 mark. So in total, 5 marks for that. Let's go on to the next part of the question. So we're on the B part of question 3, the first part. Natural stuff manufactures a single product. The following forecasts are for the 3 months ending 31st of December 20. So there we have our 3 months and our units. For October 2020, 4,000 units. November, 10,000 units. December, 12,000 units. The selling price of the product during the budget period will be as follows: October $8, November $9, December $9. Prepare a sales budget for each of the 3 months ending 31st of December 2020. So here our sales budget. So we have natural staff sales budget for 3 months ended 31st of December. So our months October, November, December. And our units and the price. So our unit 4,000, November 10,000, December 12,000. And they gave our units October 8, November 9, December 9. So we simply multiply that to get our revenue. So 8 times 4,000, that's 32,000. 9 times 10,000, 90,000. 9 times 12,000, $108,000. That's what your sales budget should look like. Let's go, and that's 3 marks for that. Let's move on to the next part of the question now. So here we have the second part of B. The accounting staff of natural staff prepares quarterly cash flow projections. Using the form on page 15, complete the cash flow statement. So we have natural staff cash flow statement for the 3 months ending 31st of December. So there you have all the relevant information. So you can take a look at it. So it says the company forecast that the bank balance will be 10,000 on 1st of October 2020. All right. So there you have your information. Let's see what we are required to do. So here is what your statement of cash projections should look like. So natural staff statement of cash projections for the 3 months ending 31st of December 2020. So there we have our 3 months. And then we simply took our information from what they gave us. Receipts, so our cash sales and the amount for it. Then we had receipts from credit customers, the amount. And so we simply add those total cash received for all of them. There you have it. And then our payment section, we have purchase of non-current assets, 7,000 for October, 86,000 for November. We had none for December. Then payments for credit purchases, we had 3,000 for October, 5,000 for November, and 10,000 for December. Then our utilities was 3,600 for October, 4,000 for November, 4,000 for December. And then our salary expense, we have 25,000 for October, 25,000 for November, 30 for December. And then our advertising expense, 1,000 each. So our total cash paid in total was 39,600, 121,000, 45,000 for payments. So our net increase or decrease in cash, so based on what they gave us. So all this information is taken from the front. So 4,400, and then we have 15,400, but that's a negative based on what we had, and 83,000 for December. So balance of cash at start was 10,000 for October, 14,000 for November, 1,000 for December. So all we did, we simply add them to know the balance of cash at the end. So we have 14,400, 1,000, which is negative because the negative 15,400 is greater than 14,400. And we did a 1,000 from 83, 82,000, 8 marks for that. So that's the B part. Let's look at our final part of the paper now for question 3. C. It says, the first part, if the owner of natural staff incurs a cost of $150 for each product and sets his markup at 25%, calculate the selling price. So cost per product, the cost price is $150. Then we're going to add our markup of 25% of 150, which is $37.50, and that's a total of $187.50. So that's our selling price. 2 marks for that. The next section says, using the information in C1, which we just worked out, calculate the gross profit margin for the product. You know the formula, gross profit over sales times 100. So our gross profit is $37.50 and our sales is $187.50 times 100, and that gave us 20%, and that is 2 marks. So in total, question 3 worth 20 marks. So there you have it. We have completed question 1 to 3 of the CSEc Principles of Accounts January 2020 paper. Stay tuned for part 2.